guaranteed, of course. It's trading, nothing's guaranteed in trading, but due to analysis, we do expect, dollar to start is rallying soon. So first, long-term target we're looking for dollar is the 60% Fibonacci's resistance level of 93.45, and if that level breaks, we could see dollar going back to this 100% Fibonacci level of 94.27. So keeping a close eye, guys. Dollar could be really, really bullish in coming few weeks, because as you know, we only have about not more than 17 to 18 tradings left in this year, because last 2 weeks of December is always quiet, is always slow. So we only have about 17 to 18 days left of trading days left, which will be really critical in the market. We might see really a massive momentum in those days, because volatility will increase, because of course traders want to cash out or cash in or start putting a new position before the new year starts, or most likely it's going to be cash out. So dollar gets stronger when stocks are dropping, because what's going to happen is you can clearly see that stock is all-time high. I mean, Dow Jones has never been, as high as this. If I just zoom out, you can clearly see that it's never been as high as this. So right now is at 30,000, which is the highest. So this will be a perfect chance for a lot of, people to start selling. Most likely people will be start selling because they don't know what the new year is going to hold. So, best thing to do in New Year, before New Year hits, is to cash out. And once you start cashing out, of course, stock will be falling, and the stock starts falling. That would give dollar quite a strong boost, because, once you cash out, stocks will convert into dollar. That gives dollar some strength, and dollar will start rising. So keeping a close eye on the X1 dollar. GPSD, as we can clearly see that, it's just been ranging in 100 pips. So if I just go to 4 hour time frame, I will show you what I mean. It's just ranging between this 100 pip range. So it's 100 pip range. It goes up 100 pips, drops 100 pips, goes up 100 pips, drops 100 pips. So that's a strong range. That's a very strong range. That could mean two things. That just could mean that GP is probably, waiting to go high or waiting to drop. But, it would be better risk management for us to actually buy GP than sell, because we do have a lot of Brexit news soon. That Brexit deal could happen this month is the last month. They have to have a Brexit deal in December, and when that happens, if it's a positive deal, which most likely it will be, anything with Brexit, as long as they get it done, will be a positive news for GBP, because that will give us investors, banks, a clear indication where the market is really moving, or where the market will really move once the Brexit finally happens. They can understand what the pound is going to do next, and that could give us when there's a clear indication from the country, usually what happens is the country economy rises, and that gives strength to the currency of that country. So whenever we see a clear indication of a country's plan, we see a currency of that country getting stronger and stronger. We can clearly see that GBP is getting stronger slowly, because the reason is because they can see that there's a Brexit deal is happening, is getting a deadline, reaching a deadline. It might happen, is most likely will happen, and all that is fueling GBP rise, and we could see GBP actually breaking above 1.34 level, which it did try, 6 pips off last time. So it hasn't broken above 1.34 magical number, but when it does, that would be a very strong uptrend for GBP, and that could give us a really good opportunity for us to enter the market as a buy. But overall, for now, we do think, GBP should be in next week as well, should go back to the highs of 1.3370. It's like a range. So right now it's testing a range support, which is this support level here, and range resistance is about here. So we most likely going to see GBP going all the way back there. Also, as we can see, gold is dropping. One of the main reasons gold is dropping is because pandemic is easing around the world. As you can see, UK has announced from 2nd of December there will be easing lockdown. So most of the countries, powerhouse of the country, London, would be in tier 2, which means that nearly all the shops will be open, and people can go on with their Christmas shopping, which is a really good sign for investors, and not a good sign for people who invest in dollar, because that just means that pandemic is easing around the world, and people are just getting more and more. There's a less sense of risk in the market right now, because stocks are rising, everything is going good, vaccines are out there. So this is all, is less risk in the market. And when that happens, that's why gold is plummeting. Gold actually did go as low as 1774. Some people are saying that it could go back to 1700s, which is possible, which is around here, which is very possible, because it was 1700 right about in June. So not long time ago, just about, nearly 5-6 months ago. So we could see gold dropping back to 1700 levels by the end of this year. One of the reasons, that's what they're saying, but I don't expect gold to drop that low because unless there's a definite news that vaccine is getting rolled out in most of the countries, which it will most likely in January. So gold could be really bearish for next few months. Next year, for next 3 to 4 months, we could see gold getting bearish, probably till first quarter, till March end or April. gold could be really bearish, and then it will go up. Gold is an asset that never loses value. That's why gold is such a good pair to trade, and that's why gold is so volatile, because it never loses value. Most likely will start to rise by end of next year. I do expect gold back to 2000 above. So I do expect gold to be as high as this or even higher by end of next year. But over right now, because of pandemic and all of that, that was a rise because of pandemic. So this rise happened because when there was a lot of lockdown around the world and the pandemic was really high at that time. The coronavirus was really high in terms of cases. That's why the gold rose so strongly. But now you can see the gradual fall of gold as pandemic has been eased slowly. Lockdown was getting lifted. Now vaccines are out there, so could see gold dropping back to 1700s. But then gold again is an asset that always rises in value. So we will see gold actually going back to the highs of 2000 by end of next year, by early 2022. So that's the outlook for a pandemic. Okay, let's look at some news. Next week we do have no major news next week. Again, is the week before December. Is December week, so most likely it's going to be not volatile, but a pretty volatile. I do expect the first few days like this week, Monday, Tuesday, Wednesday, to be volatile compared to usually how it is when the Wednesday, Thursday, Fridays are volatile. But I do expect Monday, Tuesday, Wednesday to be volatile this week. So first major news we have is pending home sales. Another important news, guys, because that will give us an indication that how strong the buying powers are of currently US people living in US. And as you know, home sales are really good indicator to us for us to know that people in US have money, because that will, if it's again is showing an improvement from previous improvement was minus 2.2%. But if there's a improvement, that would just be a very strong signal for dollar to rise. Another major news we're having is CNY. This is a major news, not for in terms of forex, but it's a very major news in terms of stocks. But if this news is bad, stocks does fall, because as you know, China is the biggest manufacturer for nearly all the products in the world. So any news that comes out of China affects the stocks more than it affects the forex. So but again, if the stocks are affected, it will indirectly will affect forex. So we'll be keeping a close eye on this news. Also, we have AUD interest rate decision. Again, it's quite early in the night, so we won't be able to catch this pair, but in the morning when we wake up and when we start to analyze the market, the real movement only happens once the US market opens anyway. So this will happen during Asian session when Tokyo markets open, but real movement always happen once the US market opens around 1 p.m. GMT. So it will be a good thing to see what's happening with RBA interest decision. Are they going to cut? Are they going to increase? Because as you know, Australia has eased down lockdown for quite a long time now, so they might be thinking of easing interest decision. Most likely not. Most likely they're right to keep at the same level, because still economy was quite low for Australian dollars. You might have remembered that some months ago it was about 11 years low. Australian dollar against dollar, it was about 11 years low, so they might just want to keep at the same interest decision. Another major news we have is CPI from Euro. Again, will affect stocks, but again, anything that affects stocks will affect forex indirectly. Some manufacturing, very important news, guys, because this talks about stocks again. So any news they're expecting a decrease in number, which is not good for stocks, but good for dollar. So if stocks are dropping after this news comes out on let me see what date is. I think it's Wednesday. Tuesday, sorry. So we have quite a power-packed week in terms of news. We have quite a few news again, because what's going to happen is they're trying to fit in all the news in next 2 weeks, because as you know, last 2 weeks of December there's hardly any trading happening, so they want to fit in all the 2 weeks news, 4 weeks news in next 2 weeks. So it's going to be really volatile a week, a month. We do have non-farm payroll, I think, next week. Let me just quickly check. Yes, we do have non-farm payroll. Oh wow, okay, we do have non-farm payroll, guys, next week. That would be crazy. The non-farm payroll is the single biggest event in US every month. It talks about how many people had jobs and how many people were employed, and you can see the numbers. They're expecting the numbers to drop from 638 to 500. That's a bad news. That's a very bad news, because that just shows that US economy is degrading more and more. So we'll be keeping a close eye. It's going to be quite a volatile week. I'm happy that we have quite a few news in the markets after a very slow day. Tuesday and Friday was really slow in the market, but we'll be starting with a bang next week. So guys, thank you so much. That's all for today's Zoom call. Again, if you have any questions about anything else, you can let me know now, or you can always ask us afterwards on our WhatsApp. We'll be more than happy to help you. If you have any more questions about the EA that we are promoting that we are personally using and that we're asking our clients are using. If you want any more news on that, you can always ask us now or later. So guys, thank you so much again. I think the chart for next week that I would recommend for you to look at is GPUSD and gold. I think those are the two charts that would be probably the most volatile next week, because GPUSD does want to break above this level. So we'll be keeping a close eye on two major charts next week: overall, gold and GPUSD. Thank you so much, guys.